Okay, great. Thank you, Daniel. So, first caveat, non-farm payrolls is very difficult for one reason and one reason only. You have other time frame involved. Okay, and this morning is a perfect example. We've already had what from 86 down to 56, a 30-point range pre-market. Okay, so when I see that kind of action pre-market, the first thing I'm going to do is I'm looking for a 10-point rotation minimum on my trades. Is that going to cut me out of some of my trades? Absolutely. However, I'd rather be overly cautious than overly aggressive and rack up a bunch of losses. Now, there was a time pre QE that I simply did not trade this day, and I may not trade today at all. It's going to have to be a really sweet setup in order for me to take it. It doesn't mean that the zones won't work. I fully expect them to work. However, OTF means other time frame, and it's comprised of hedge funds, mutual funds, pension funds, and other large institutions worldwide. They simply don't care about the levels, as you can see the way we've moved up and down through them this morning. However, and then the danger of that is the zones get busted. Also, the algos can fire for double the size that they normally fire, which means if you have a stop 2 points behind the zone and an algo fires and it goes 3 points and shoots right back, we get stopped only to watch it reverse. Okay, so there's one of several ways to deal with this. Number one, if I do trade, my position size will be cut in half out of the gate. Okay, and will probably stay that way the first 1 or 2 hours of the day. The um, last hour can either be very tranquil or extremely volatile. Secondly, the first hour is usually the most active and the most volatile on non-farm payrolls. Again, I think people are going to come in with a surprise as to how volatile it's been because we've been leaning on QE no matter what the numbers have been as a put on the market. And the way the market's been reacting to news, I mentioned this earlier this week, that put doesn't seem to be nearly as strong as it has been. In addition, we've accomplished a 50% retrace from the highs to the lows, from the swing low to the swing high, right? That's been tagged, and that's really quite normal in a market that's beginning either to change personalities, right, or beginning a rollover, one of the two. And I'm not sure which one we're in. In addition, on the daily time frame, we have stopped one timing on the downside. And all that means is I'm looking for a change in character, whether that change in character, and it may not come today, although obviously we're going to have a wide range. It may not come today, but it means I'm looking for different types of trade action than what we've had over the previous 1 or 2 weeks. But I do not know what that trade action will be, so I'm looking for clues. So let's go over and see what I am looking at for out of the gate. I'm going to try and be very brief on my executive summary because people have said that have mentioned that it's caused confusion when I go too deep into the conversation. So I'm going to do an executive summary. When I'm done, I'll tell y'all you can drop off. Then I'm going to go look at the volume profile, and I'm going to look at the overnight trends and support and resistance levels. It's a little more advanced, and it may be a little too much information for some traders out there, which is cool. You can just drop off after the executive summary. So let's go into it. So first of all, we've already had a 30-point range from here all the way up to here. Overnight, I believe 76 was capping it. Okay, and I would suspect that that's going to be a pivotal point intraday, right? This is our gap fill down here at 1767. So the first thing I want to know is, are we having an open drive up or down, and what will it take for me to identify that? So first of all, based on where we open, if we open at 1776, right, our gap fill is right back here at 1767, and this is also Thursday's high. Like yesterday, I'm looking at the first few candles. So normally, an open drive higher goes by 1, 2, and maybe a third candle up, each candle breaking the prior's high and the first 5-minute bar low not being violated. It doesn't have to be this way, right? We can it can kind of trade sideways for 30 minutes and then go, but often this is a telltale sign or giveaway, which makes it very easy to identify, right? It can happen other ways, but if you see this, you know you have high odds. Secondly, just like yesterday morning, the tick will be and remain positive almost for the entire first hour. Okay. The next indication after that, let's see. Dun, 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 dun. Oh, half gap and gap fill. So we won't have any attempt at half gap or gap fill. Okay. Continuing on that theory of what it would look like on the upside, our first test is whether we can get half gap from wherever it is we open. And hell, we could open up another 10 points higher or 10 points lower. We still have almost 22 minutes to go. First test is half gap. If we find responsive buyers off a half gap, right, and then we clear this 74, 76 level, I'm going to have to move this initial resistance because I normally don't have initial resistance in the zone, and I'm probably going to place it, given the volatility, I'm going to move initial resistance up to this 1800, 1801 level. Actually, I am going to do that. Why? I want to give it plenty of room. 1786 was the high. This gives it an additional 14 points. We've had a 30-point overnight range. If I take half of that range, right, that gives me another 15-point extension. 45 points up on the day. Well, excuse me, 45 points up from the low. That would put us roughly from yesterday's close right here at 1767. That would drive us approximately 30 points, 33 points. And that's on our downside day when we were down 300. That's about what we were down on that down day. It's rare to see us push up more than 20, so 30 would certainly be an extreme. And I would expect responsive buyers in this area unless we get to it in the last hour. So unless we get here in the last hour, I will be taking a trade. I'm willing to take a loss in this area. I'd prefer for it to be accompanied by tick divergence, but it's not necessary. Also, I have to be measuring the size of my rotation, which means on these zones, right? If we trade here and we base in this area like this, okay, at 1789, for my purposes, right, the next zone that's going to be valid for me to take a trade is going to be up here at 1799 and a half, 1801. What is this going to do? It's going to prevent me, if we have a truly volatile day all day on the upside and downside, of getting blown out in a zone that's too close to the prior zone, given the volatility that we have, right? This is what that attempt is. Why would I take a trade right here? If I get tick divergence on either a 1 minute, right, and it has to be on a 1 minute, preferably I'd see it first set up on the 5 minute and then followed by the 1 minute, but it has to be on the 1 minute for me to take a zone with less than a 10 minute, with less than a 10-point rotation. In addition, my 25-minute rule will be in effect today. That means if we spend 25 minutes, 5 bars, from the time we first move into the zone, right, and I'm unable to get a 2-point rotation down to get a scale out of a trade, and it hits 25 minutes, I can tell you right now, I will close the trade, win, lose, draw, whatever it is. I will simply close the trade or move the stop to break even, one of the two. Everyone knows that exactly what I'll be doing. There's no need to tweet it at this point, right? So let's look at the upside scenario quickly. We open at 75 right here. Again, I'll be looking for half gap and gap fill. If we accomplish that half gap or gap fill and we come back around, right, NQ, for whatever reason, and I'm not sure because I don't look at the news, but we've been flying on both sides of the thing. We're just at a couple of minutes trading right near the highs, and we're not far off of the highs right now. The high was 35.18. So I'm going to key off of NQ. If we do trend up, right, first I'd had to see us get above this 74.76, followed by this level, and then followed by Globex high. If we open here, Globex high is going to be my first valid trade, right, because I want a 10-point rotation today. If we fill the gap, right, then 67 up 10 would put me at 77 to 79, right? So if that's the case, the front to the back of this zone will be a valid area. Because this is in the area where we traded overnight and very quickly, I'm probably going to want to see tick divergence or a pause in the dome. I don't have any other way of explaining that. Then I'll literally see the thing stop, right? If you're looking to, wow, that didn't help very much. If you're looking to control risk today, right, the only way I have to do that for certain is to target the back of the zone with a 2-point stop behind, and simply don't be shocked if you get stopped once or twice. It's to be expected actually today with the range that we're having, right? The other way to handle this problem, it's not a problem, it's simply we have a wider range. You have to adjust to it, right? Most of the time, I'm anticipating having a 10 to 14 point daily trading range, right? Extending up or down in either direction. Well, clearly we haven't had that for the last 2 weeks. And so one of the ways to handle that, particularly on a day like today, is cut your size down in half and then double your stop is the other way to handle that. I'm not going to be doing that. However, it is one way to compensate for the volatility in your trade plan. So that's essentially my trade plan on the upside, right? It requires that we hold, first of all, initially, that we hold the gap fill and half gap. So let's go through the next scenario. We open up and they want to take it for a test of Globex lows. Assuming that we open at the 76 level, right? That'll put us all the way down at, let's see, 76 puts us into, 76 puts us into 66, right? Again, I'd be willing to take the back part of this zone a responsive trade if that's the case. And then following this, depending on whether we bust straight through or consolidate, if we consolidate like this, I'm going to want to see another 10-point rotation, which will put me right into that white zone. That means I'll probably, at least initially, be inclined to skip this zone. Okay, so I'll put a 0 there. Okay, it doesn't mean I won't take a trade here. What it means is I'm not going to take it automatically. I want to see tick divergence in order to take it there. Moving on with that concept, that I probably pretty much automatically calculating on the rotation down, depending on whether, again, whether we have a trade where it bases like this and then rotates lower and busts through the green zone, I'll automatically take a trade in the white zone. However, once again, I got to remind you the caveat. If you see us starting to do this, okay, I'll then need tick divergence in the white zone in order to take it, and I'll skip to the next zone lower. Thursday's low is going to be pretty key, right? And also the other key here, if we get below the white zone, which obviously held pre-market, we found responsive buyers there right to the tick, 1758.25. And I put these out about 4 a.m. to my clients this morning. So as they know, we literally ticked off here, right? I'm willing to take a trade almost on any circumstance. However, if we consolidate here, I'll have to take it at the very back of the zone unless I see tick divergence. Again, with a 2-point stop is the way I'll personally be handling that, right? So I think I explained the concept pretty well of how I'll adjust to 10 points up or down. Let's go into the concept of what a trap trade will look for those guys that trade with trailers, or how you can look at this day. If we clear, and it would be hard to imagine how we're going to do that, but, well, no, actually it wouldn't. It's non-farm payrolls day. Anything's on the table. So what that will look like really at any level now, right? We'll set a, if we trade at Globex highs, come above, and then we get back below Globex highs, that is a trap trade, okay? Same with this. If we trade below Globex lows, right, we trade back above, there's a potential for a trap trade. If we trade below yesterday's lows and then back above, that's a potential for a trap trade. What happens on trap trades? We tend to trade back to the middle, and often we'll trade all the way to the other end of the range. Same thing on the upside, right? We can trade back into the middle and then all the way up to the other side of the range. What I want everyone to keep in mind today is that we can easily have 20 points down and 20 points up in each direction, and that makes trading hard. So I can't make a simple trading plan for today because it is non-farm payrolls, and that's exactly what causes so much of a challenge for traders. It's hard. Everyone thinks, oh, that'd be great if we get a large range. Well, large ranges like this, where we do what we did yesterday, and you get in at the low, well, everyone thinks that's fantastic. What no one thinks is fantastic, right? Well, I like it, but most people don't, right? Is if we whip up like this, do this, and then we whip straight down like that. Why? We bust zones on the way up, and we bust zones on the way down and people get run over, and no one's happy in that case, right? Unless you happen to be able to pick off the very top and the very bottom. So if you're the last place that I'd want to look for as well, if you're very conservative, right? If we open up at 1777, what I would simply do is from wherever we open, add 20 to 30 points, and those are going to be the better locations to take trades from. Why? You're going to get a nice stretch, and markets tend to get exhausted at plus 20 and minus 20, and they tend to be good points where we'll find reversals. So again, I'm simply trying to introduce strategies at the zones that will make it easier for you to trade. That means if we open at this 76, 77, this 99, 1801, right, we'll have the market very stretched. Conversely, from 77 down into the 50s, the white zone, right, will have us very stretched. In addition, if you'll look at yesterday, on a daily basis, after 9:30 a.m., we tend to get either a slowing of the selling and potential reversal areas, and the same is true with trend days up. They tend to slow after 9:30 and potentially provide reversal location for swings lower between 9:30 a.m. and 11 a.m. and I'll be looking for that. I'll also probably be skipping the first hour's trades entirely. I certainly will not be calling any out, right? It's simply going to be too hard for me to get it out and be able to structure that trade the way I do on StockTwits and Twitter. And I'm going to assume the market's going to be working very, very, very fast. Now, what would make me change my trade plan this morning, right? If we go through the first hour and we end up with a 5-point range, right, or 8 or 9-point range, I will go back to a 6-point rotation after the first hour if that's the case, right? But if we have a 20-point range the first hour, I will stick with my 10-point rotations. I would simply rather not get a single trade today, okay, than have to bury myself and work next Monday and Tuesday to get my money back, because normally we don't have this kind of volatility. 2009 was the only time I can remember where we had 50-point up and down ranges, and we're nowhere near that environment. So I know Monday we'll probably go back to a 10 to 20-point range, and I can trade that very successfully most days and make a lot of money. I've had a very good week, and the reason I've had a good week is because I didn't smoke myself yesterday, giving back all the profits I made Monday through Wednesday. And I intend to survive this day as well in very good shape. Also, one last note. If I get a trade, let's say I take a trade here, and I get my initial 2-point rotation, let's say it goes 7 on the bid, 8 ticks on the ask, okay? I will not let that trade come back and go negative on me. I'll either take my profits right there, or I'll move my stop to break even, one of the two. I usually prefer to move my stop to break even because over 80% of the time, I'll go ahead and get that 8-tick scale, and then I can manage whatever my trade plan calls for in a normal fashion, right? Whether it's to move to net break even or true break even on the balance. And again, you should have a trade plan that guides you prior to getting to that point, right? The last piece is on NQ, right? Now on NQ, if I see NQ busting new highs, right, I'm not going to be overly eager to take a short. I'm going to keep an eye on that, right? Again, because if we're having an open drive higher and NQ comes in with buyers, I don't want to get crushed today. So that'll be my clue. And again, it'll be easier for me to do so because I'm simply avoiding the first hour altogether, most likely, right? And I'm certainly not calling out, again, any trades in the first hour. That's the end of the executive summary. On NQ, I haven't had a chance to adjust the chart. I'll show you what I got so far, but I haven't adjusted for Globex lows and highs. This is what I put out earlier this morning at 4 a.m. So I know Globex highs have changed. Let me see where they are really quick. So 35.18, let's clear this real quick so I can grab this. Look at that, right to the zone. So 35.18 Globex highs. On Globex lows, let's see where we traded. 34.79.50. Just shy of this zone right here. again, it's the white zone. I missed it by just a tick. Okay, so you also need to adjust this zone up to capture the Globex lows, right? The 79.50. Also, keep in mind, this is gap fill, and since it's so close now to the white zone, I would simply make it a single line and not a trading point, right? Because we obviously zipped right through it. So I'd simply move it just like that and have it as a point of interest. Again, I would measure half gap and gap on this. Since we're opening near the highs, right, of, well, actually right here, 35.18, right? So since we're opening near the highs, I want to look at primarily where's half gap and then completing the gap, right? I know that even if we come in for half gap and we reverse off of that, that'll be an indication to me that we have a strong market. Again, with gap fill, if we're unable to penetrate below gap fill, that'll be an indication of a strong market. On the trap trades, right, if NQ clears above, right, and then we don't ricochet out of it on the backside test and we close below and hold below, I would look for a trade to the other end of the range. That would bring us back into the white zone, right? I would expect responsive buyers. However, if I don't get a quick snap out of this white zone on NQ in particular, right, I'm going to look for Thursday's lows. Again, normally I look for a 10-point rotation minimum, 10 to 15 points. Today, I'm moving that range for 20 to 30 points on NQ, particularly in the morning session. Again, if I see us go into a normal range, I'll adjust back down to my smaller range. Coaching clients, for those guys who do the scalping on NQ, the edge is almost completely eliminated. I got to warn you right now, almost completely eliminated on non-farm payrolls, and I will not trade my scalping strategy today in NQ, CL, or GC, in any of them. I simply will not execute that trade. I'll only trade ES. I'll only trade at the zones. Caveat, in the first 2 hours. Again, if it looks like a normal day, I will go back and be happy to scalp NQ. But that trading strategy will tag you out on your stops today. So that's the last caveat I have. I'm going to take 2 or 3 minutes to look really quickly at the volume profile for everyone. And again, since I'm not trading the first hour, I will go through the trend charts. But if that's been confusing anyone for any reason, I make it too complicated, please drop off now because this is where the confusing part comes in. So, and that's the feedback I've gotten from various clients. Okay, so let's go look at the ES real quick on the profile. We've traded up to, I believe, 86 and change. So that puts us right here. Okay, as you can see on a daily chart, we had structure right here, right? Yesterday was the test at the bottom of that structure, and this morning was a test at the top of that structure. It's completely feasible, right? This was the high. This is approximately halfway back. Here, I can calculate that really quick and find out. Let me see, I just need a 50% retrace here. Oh, I do need a 0, don't I? Got it, okay. Okay, 1788, 1789 is exactly 50% back from the highs. Okay, it is very common, and if you'll go look at the gold markets, right, to follow a pattern that goes like this. Okay, and it can stay like this for a long time where we just stay in this trading range. Sometimes we'll break it a little bit below, then push all the way back up. We'll break a little bit above, and then push back in. This is a sweet trading range, by the way. Look, this is a 1720 all the way up to 1780. That's yeah, I'll take that all day long. That's 60 points, and you can make a ton of money in a trading range if we go like that, right? Obviously, for swings, the roughest place to put a trade on for swing trades is right in the middle. The sweetest place to get swing trades and also launch options trades, right, is from the top of this and the bottom of this. I don't know that this is what we'll get, right? But I do know that 50% retracements are very common on a daily chart. Go look at the gold market and look at the retraces that it had from top to bottom prior to it breaking down. And it took a good 4 or 5 months of this kind of action, right? And then we finally swept to the downside. And I don't know that this is ever coming. I'm not certain. Right now, this is just looking like a normal trading range to me. And the range can certainly also, the other note, we can certainly extend this range all the way up to here. Would also not be shocking, right? It is possible. I don't think it's probable, but hell, look at this market and look at the ranges. Anything can happen at this point. So keep in mind, this is 50%. It's an important area, and it's very possible that we get rejection out of here. Let's go look at NQ really quick. I'm going to have to set up the same thing again here. Normally don't use this. Easy enough. Okay, so let me bring this in. There we go. So 35.19, right below where we're trading right now, brings us to 50% back. Okay, we just opened there. I would not be shocked, right? And even if we overshoot a little bit, somewhere between here, 35.40 and 35.20, that we find responsive sellers and we push back in and eventually all the way back down. Again, that's a pretty sweet trading range right there. If we do push over this, right, the next structure is up here. I would expect rejection from the bottom and then possible rejection from the top if we get up there. Again, that's a pretty big stretch and a pretty tall order. I'll look to see if we maintain that. Also, if you'll look on NQ, we have a 30-point extension from the prior day's close, yesterday's close. That's pretty good. Again, if we don't hold here, I would look for another 60 up, right? Excuse me, another 30 up. If I get another 30 up from here, that puts me just below, let's see, 20 and 30, 35, 50, which put me right here. And I do have some volume there to stop us, right? And behind that comes 35.63. Again, not holding my breath too much to see that that will hold. And really, that's it. And I'm actually going to drop off because I want to sell some. Binary puts here as soon as they open that up. So I'm going to drop off now. I hope this helps someone or everyone, and I hope you have a great day. If you have any questions, you can reach me at tradingperform@gmail.com or hit me on StockTwits or Twitter. And I need to jump. I need to sell some in the money binary puts. So I will talk to y'all later. Have a great day.